Hello and welcome to another market analysis segment with Bullionite. My name is Mawjood. I'm the founder of Bullionite. Today, my main focus, because a lot of people have asked me for this. I've done this analysis on interviews that I've done on YouTube, but a lot of people have asked me, hey, can you do a video just about the US dollar, okay? And the US dollar index specifically, right? The weakness in it or the strength in it, what's going on. So today, that's my goal.
My goal is to look at the US dollar index. And just so that people understand this, the US dollar index is the US
dollar against the 6 of the world's largest currencies. So it's a basket of 6 currencies, right? And it gives you a really good idea of what's going on in the value of the US dollar. Because, a lot of people talking about, hey, is the US dollar getting depreciated? What's going on with all the debt that we're printing? Well, or the debt that we're creating and the money that we're printing, okay? That's the more correct way to say that. Let's have a look at the charts. And what are they saying? Because remember, I've always said this, right? Listen to the market. It doesn't matter whether you're right, I'm wrong, I'm right, you're wrong. It doesn't matter. The market is always right. So listen to the market and make actionable decisions based on that information. Okay, so let's get to the US dollar chart. Okay, so we're looking at a very interesting chart, and I want to point out a few things. First, as always, I'm just going to make everyone familiar with the type of chart we're looking at, right? So the chart that we're looking at right now is the US dollar candlestick chart, and you can see it's a continuous contract. So it's the chart that'll give you the best price movement. And the next thing is we're looking at a daily chart, and we're looking at a candlestick chart. Again,
why do I look at candlestick charts? Because they are the best visual representation of price action. And you have to have that in order to make good, actionable decisions when it comes to trading, okay?
First thing I want to point out is you have to train your eye. Remember, I've always said train your eyes when you look at a chart and try to get the most important thing that it's communicating to you. First thing you'll understand is in mid-March, when everything was tumbling, right, and collapsing, stock market was dropping, gold was coming down, everything coming down, like a normal reaction, because the US dollar is always like this. It's a safe haven currency, right? So you expect the markets, or internationally, you expect people
to buy the dollar, or banks or institutions to get into the dollar.
And that's what happened. The dollar initially went up very quickly, from around 94 or so to 124, very quickly, right? Now, here's what happened.
After we as a country decided the way to fix this problem, when it came to the stock market coming down, by the way, you got to let markets do their own natural thing, okay? The more you try to prop it up, the more you try to do artificial means of keeping a market up, the more it's going to drop one day. So get ready for that.
But when we decided to print an unprecedented amount of money, $6.5 trillion, calling it a stimulus package, which I don't really think it was a stimulus package. I feel it's more a rescue and relief package, right? What happened is very interesting. The dollar tumbled. And it came down every day, almost every day, just kept dropping and dropping and dropping. This is very significant, okay? Very significant, because what has happened is we have dropped now from the time the market started collapsing, and then we decided to print money. We have dropped more than 10% in value in the dollar. This drop is more than 10%. It's dropped from like 104 to about 93, or maybe even 92 and 91 and a half or so. That's a big deal, okay? More than 10% drop in the dollar in how many months, really? 1, 2, 3, 4, maybe 4.5 months, right? 4.5 months, we've dropped more than 10%. What does that mean? Okay, let's put that in perspective, all right?
If you have $100,000 in the bank, whether it's a savings account, a checking account, it's actually worth $90,000, okay? If you have $1 million in the bank, it's actually worth $900,000. If you have $10,000 in the bank, it's actually worth $9,000, okay? So whatever spectrum you fall in, that's what's happened. Why is that a big deal? Because your banking institution and your financial institution is not going to send you a statement saying you've lost 10% of your money, okay? It's still going to say you have 100,000. But what's happened is you now only have $90,000 worth of value on that money, okay? Or spending power on that money. That's a big deal.
The other thing to keep in mind is anything that's denominated in dollars, or meaning priced in dollars, probably went up significantly during that time. This is the reason why gold went to a record high. Priced in dollars, when the dollar was dropping, gold went up significantly. Silver went up almost 50% in about 4 weeks, or maybe 5 weeks. It went from 20 to 29, almost 30, okay, 29.91, almost 30 in about 4 weeks. Why? Because the dollar is collapsing.
A lot of people say, well, it's because of coronavirus. It's because of, the uncertainty. Yeah, I agree with you. Yes. But the bigger picture is that the dollar is dropping, and therefore assets denominated in dollars will go up significantly. This is another reason why later on I'll do another video. Crude oil could go up significantly. I traded crude oil when it went from $33 a barrel to $148 a barrel, okay? From 2006 or 2007 to 2008, okay? Again, when the dollar depreciated. Keep that in mind, okay? Or as an inflation hedge. Now,
when I see this dollar dropping so much, this is a big deal, right? What does this mean? First, let's do this. Let's go. So what I did is, we have to do a little bit of forensic analysis, right? We have to say,
hey, what does this mean in a bigger picture? Is this sustainable? Does this ring alarms? Is it a big deal? Guess what?
Let's look at the monthly chart on the dollar. Now, when we look at the monthly chart on the dollar, you can see something massive that's happening. But just for your education purpose, let's look at the weekly first before we get to the monthly. And we are seeing something very, very interesting. You can see that this is a weekly chart. Every candle is 1 week's worth of data, okay? And this is why you can see how every week it's just been hammered down. And it took out this massive coiled up support region right here. It took it out like hot knife through butter, okay? That's not good. Okay, that means it wants to go lower after a bounce, because it did get oversold, which is the reason why you're seeing gold pull back and silver pull back, because they got overbought, right? We have gone over this concept many times, and I'll cover this over and over again, the concept of overbought and oversold. But you may see a bounce in the dollar, but after that, it can continue lower. How far down can it go? Here's what's interesting. It showed us that in a few months, it can drop more than 10%, and it can go through a massive support zone, like hot knife through butter, right? Let's go to a monthly chart. This is where the big picture is formed, okay? Here's what I saw. When you go back to like maybe early 2002, the dollar was around 124, the index. When it started a downtrend, just like it started now, it actually went down month after month after month after month after month. And finally, by 2008, from 2002, it had dropped to around 72 or lower. That's about 50% drop in the value of the dollar, guys.
50%, okay? Why is that important? If you had $1 million in the bank thinking that it's safe and you want to keep it there and you don't want to touch it and you put it in your savings account, by the time 2008 came, it was worth $500,000. If you had $100,000 in the bank, by the time 2008 came, it was worth $50,000. Are you getting my point? That's how much you lost. But your bank's not ever going to send you a statement saying that. So it is our personal responsibility to take action and figure out a way on how to benefit from this weakening of the dollar and maybe a massive downtrend developing in the dollar. Because here's why I say that.
Because if we look at an Elliott wave sequence, right, or an Elliott wave analysis, and if you look at the three major waves, right, this could be wave one that happened from 2002 to 2008, where the market dropped more than 50% in the dollar. The counter trend wave is this. And could this be the beginning of wave three? Why is that such a big deal? Because usually wave three is equal to wave one in size. That means, could we have a similar movement in the dollar like we saw from 2002 to 2008? And if that were to happen, imagine where dollar denominated assets could go.
This is the reason. Imagine where the price of gold could go. Imagine where the price of silver could go. This is the reason why people are talking about $3,000, $5,000 gold. People are talking about $100 silver, $200 silver. Do I agree with all of the price projections? I don't need to look at actual price projections. But I do agree with the fact that if the dollar continues in this downtrend, you can see way higher prices in gold and silver and in dollar denominated assets, okay? The final price doesn't really matter, but if you were to position yourself and take advantage of this market, having this knowledge and having this education, it'll make a massive difference to your wealth creation, okay? Instead of wealth destruction, you can create wealth. You know, you'll actually create wealth instead of destroying your wealth. The other thing I want to say is last time when crude oil went from from $33 a barrel or even $50 a barrel to $148 a barrel. That was when the stock market was crashing in 2007, 2008, right? It was also a time that I remember clients telling me, hey Mukarram, I really am really affected by crude oil prices going higher and gasoline prices going higher, because as crude goes up, gas goes up, right? Then my thinking was, hey, if you're being affected by it, why don't you invest into crude oil? Why don't you invest into something that will move up as the price of crude oil goes up, right? So you could be smiling at the gas station like I was when I was pumping gas, because we were trading crude and gasoline. The same thing applies now. If you believe the dollar is going to come down significantly because of our money printing, because of our debt creation, because of everything that's going on and monetary policy that we have, then get into assets that can create wealth for you with that knowledge. Instead of just looking at it and saying, oh, I don't know why I'm going through this pain. Why am I going through this? Find pleasure from this by figuring out how to use this knowledge to create wealth. Okay?
So this is something that I wanted to share. I know it was a quick, short video, but this is a very important thing when you look at assets that are correlated, or in this particular case, inversely correlated. Okay? So if you have any questions, please reach out to me. You can email us at info@bullionite.com. You can go to our website, bullionite.com. You can go to our channel, YouTube channel, Bullionite. If you like our videos and the content, please hit the like button. If you want to subscribe so you can get more content like this, please do that. But I want to hear from you. I want to know what kind of topics you want me to cover, and if the information was valuable, because I want to continue to give you the best information that we can. Okay?
Thank you again for joining me on this market analysis segment. Happy and successful investing and trading.
Content is for educational purposes only. This is not investment advice from Bullionite LLC. There is always risk for substantial losses in investing and or trading through any financial instrument with or without this or any other type of advertised product. Past performances are not indicative of future results. Different types of investments involve varying degrees of risk. Specific strategies or education presented by Bullionite LLC and its associates in this video are for educational purposes only.